Okay, hi guys, welcome to the Kazatomprom's financial and operating uh, presentation of 2020. Hope everything works well and we can share some conversation about the uranium markets, obviously centered about Kazatomprom today. Um, Obviously, the most important company in the uranium sector, the one that dictates what we can say like the future of the sector, right? Because of their power, they control a large part of the uranium supply in the world. So today is extremely important. Every time that Cameco and Kazatomprom speak publicly, that's not common, right? They speak uh, 4 times a year, so we can hear from them and form our ideas about the uranium market. So obviously a presentation is starting in 15 minutes and it will be covered in English, so that's great. No Russian requirements here to understand. While we wait, I want to take a quick shot about the financial results that obviously are public. Now we are going to see just the presentation and the comments from Kazatomprom that obviously the financials are already public. Pirmatov, which is the CEO of the company, says that despite the year's difficulties, good morning, Thomas. Welcome to the chat. If you want to talk about your uranium holdings or why are you invested in uranium, you are obviously welcome to do that. So despite the year's difficulties, Kazatomprom performed exceptionally well, says Pirmatov. We have once again delivered on our commitments, which is the most important thing, to be a reliable supplier. No one wants to under-deliver on their commitments, and these companies, Kazatomprom and Cameco, obviously are the ones that set the tone and those that are the more experienced in the market and the big leaders. It's difficult to see in other sectors to have such a leadership from just two companies. All while keeping our strong environmental record and continuing to emphasize safety across all of our operations. Obviously has been a big point of conversation, environmental, ESG type of things, and also COVID-19 related situations, and to see the security of the teams working in the mines. And as he says, as expected, production volumes were 15% lower than last year on a 100% basis. Obviously, the COVID-19 disruption has been really important. And Kazatomprom has lost 15% of the projected production volumes. However, by efficiently managing our production, inventory and purchasing activity, obviously they want to keep some inventory around, normally around 100%, 80% of 1 year's production. They like to keep on inventories just if some kind of out of the market thing happens, right? For example, Yellow Cake raising money and buying almost 3 million pounds from them. That those type of situations, they have to be covered and they keep inventory around just to keep with those demands that can appear in the market. We deliver on our sales plan and saw consolidated revenue climb by 17% compared to 2019, primarily thanks to a modest increase in spot price. So they had less production, but revenue climbed by 17%. So we can see how these companies are really sensitive to the spot price, extremely sensitive. Spot price has moved, but has not moved that much. So seeing them, their revenues grow 20% almost, it's pretty impressive and tells us that these companies are really, really sensitive to spot price. With higher revenue and production costs coming in lower than anticipated, adjusted annual net profit rose 40%. Spectacular growth, really. These results are really impressive. While adjusted EBITDA attributable to the company grew by over 30%. So, spot going up had a dramatic effect on Kazatomprom. So now we understand why they are being more not that aggressive in the market, in their production, because this company is so sensitive to spot price, and if a spot runs, say, to 45, they will see a dramatic increase in their profits. Anibex says, hello, good morning, I'm taking a quick look here. Yeah, you're welcome to join the chat. The presentation will start in just 10 minutes or less. So Annie, you're welcome. We are seeing some general comments from Kazatomprom CEO and what to expect in this presentation. So our strong performance and commitment to our customers through extremely challenging conditions in 2020 serves to reinforce Kazatomprom's status as a reliable partner and dependable fluid supplier for the nuclear industry. Leader of the industry, really. Cameco has a larger market cap right now, but of course Kazatomprom has a more large profits than Cameco. Just sometimes we factor in some geopolitical risks there in the Kazakhs, being in that Russian orbit, but obviously Kazatomprom's results are really, really impressive for this quarter. They say that they are confident that uranium demand will continue to grow, and as the market transitions to a more sustainable price for the fuel the industry needs in the medium to long term, they need Kazatomprom obviously as a low-cost producer with substantial long-term reserves, remains best positioned to benefit from the recovery. Part of revenue gains also comes from Kazten's devaluation. No doubt. Let's see if they can explain this a little bit better in the presentation. Thomas, if you want to elaborate on that matter, that would be great. But I guess the analysts are going to ask them in the Q&A section. So those are the comments from Pirmatov, CEO of Kazatomprom, and now we will wait until the presentation starts, which should be just in 5 minutes. So yeah, yesterday was a really, really eventful day in uranium. We saw a lot of moving parts. Some uranium stocks just rising, a lot. Cameco with a big rise of 8% yesterday. Really impressive moves. These prices of stocks are now discounting a uranium price probably around 40-45. So it's a really impressive move, really a strong move. And at the end of the day, we saw how things are developing in the market. Denison announcing that they were going to purchase uranium in the spot, so putting more pressure to spot prices, and we saw a little uptick in the spot price because of this Denison wanting to buy some pounds in the market. So we are seeing that first stocks have moved up, and then it seems that some players in the industry want to corner the spot market, buying in these cheap prices like yellowcake, and then being able to participate in this bull market that it's probably coming. Stocks have moved really aggressively, and we are seeing now that a lot of financial players are coming in to the market to buy material, and that is going to put pressure, obviously, on a spot price that probably we've seen the lows of a spot, I would say. So welcome everyone that is joining us. If you want to present yourself, you can do that. Please leave a like in the video and subscribe to my channel. I talk about nuclear energy and the uranium market and other commodities also. And if you want to talk about why you are invested in uranium and which type of investments do you do, you're welcome to do that. Also, if you want to comment anything that is going on in the presentation, you will be welcome, and we can have a chat around Kazatomprom's financial and operational results. So when the presentation starts, you guys can tell me if you want the volume of the presentation to be up or down. Please, you're welcome to do that. Also, big move this morning in yellow cake stock. We've seen gains of 5% in this morning. With that just little move in spot price last night. So everyone is welcome to the discussion. Remember that this presentation is covered in English, so no Russian needed to understand this. As it is here, following the management remarks, an interactive English Q&A session will be held with investors. The speakers are Pirmatov, CEO, Chief Financial Officer Kamila Sidikova, Chief Commission Officer Batirbayev, that has participated in some public events, and Cory Kos, Director Investor Relations. Obviously they are taking a more Western approach lately. And as Annie says, Russians always late. Hope they are not late in their deliveries for their clients. I don't think so. Okay, it's a start.
Good day, ladies and gentlemen, and welcome to Kazatomprom's 2020 Operating and Financial Review conference call. At this time, all participants are in listen-only mode. Later, we will conduct a question and answer session through the phone lines, and instructions will follow.
Please tell me if the volume is okay.
Make questions through the webcast page using the Ask a Question button. I will now hand over to Director of Investor Relations, Cory Kos, to open the presentation. Go ahead, sir.
Thank you. For me, it's my mum, I would say. I also have my aunt as well. She was a senior leader in an investment bank. Got to a really good position. She's a director there. It's just great of having her to be a beacon of light, to inspire me to be, to reach, to work in the corporate world. So yeah, she's my inspiration. That's my Auntie Pat. When you see me, what do you see first? Do you see my ethnicity or do you see my gender? Allies or people that are non-female, be open, make everyone feel valued is very important.
I think male allies have a very important role in terms of the culture of the organization. I think a very important role that male allies can play is actually just to listen.
When I look back at my own personal career, there were multiple instances where men who were my champions and sponsors pushed me forward for roles that I wasn't even sure I was ready for.
I still remember the tips that he telling me at I still remember by heart, is that, Jesse, when you run the company, you run the company as your own company.
I was thinking about just exiting the workforce, taking a year off. He said, you're going to stay in. And what you're going to do is you're going to focus on your energy, and you're going to focus on optimizing your energy so that you can balance your health and your work. And the fact that he told me to stay in and to like have that as a conscious focus every day coming in, I don't think I'd be where I am today because he gave me that advice.
And it's so inspirational to me. I also love being in the office and actually building trust through personal interactions. And it might be actually an informal coffee, or it could be a business meeting. But
Some technical problems. No, there we go. Yeah, we're in intermission. So yeah, it's starting a little bit late. So for those joining us, we are waiting to Kazatomprom to start the conference call. Obviously they have some kind of technical problems or they are a little bit late, so the conference will start soon, I guess. For those joining us, you can present yourself and we can have a chat about the uranium markets and why your investments in uranium and why are you interested in this sector, and also about the results that Kazatomprom is putting out today. Sorry, I don't know if they have any problem, but it says here that the event has ended. I don't know if they are putting another link or something, but obviously there are some kind of problems. So sorry, guys. Yeah, as Thomas says, the thing that investors are looking at most right now is the production outlook for the future. So we had recently the production manager of Kazatomprom, the guy that is in charge of the production numbers, has resigned or has been dismissed from his workplace, to be accurate. So this tells us that something is going on behind the curtains that we are not seeing. Probably they will maintain their production outlook, but then I don't know if they can sustain those production levels. Some of the closures last year have an impact in 2021 production, so it's not as easy to ramp up production. Thomas says possible interruptions have huge impact in the whole market. This is true. This is the leader of the market. So in a very, very small market like this, the supply disruption it's been extreme. So Annie says that she's not invested in cash, but they are of course one of the most important players in the space. Obviously, it's the one with Cameco, the two that set the tone for the sector. I mean, UX, Lamarite, and some explorers, as I see more small plays you are playing right now. So that's good. You can catch up big moves if the sector moves in the right direction. I think that those are going to benefit the most. But obviously, the most risky plays from your part, Annie. I also will disclaim that I own some UX, but I lean towards more the big names and the big developers than the small ones. So. Yeah, so welcome everyone that is joining us now. You are welcome to chat with us. Say where are you investing? Why are you invested in uranium? And why are you interested in this conference call and in the uranium sector? Thomas from Germany, he says that he's invested in 8 companies, around 40% of the portfolio is in uranium stocks. Yeah, for me it's pretty similar like you, Thomas. Uranium is probably half of my portfolio, pretty aggressive portfolio, but obviously I invested in 2019, so I started investing. So right now obviously we are in some gains and just waiting if the sector can even go higher, right? So yeah, I prefer more a concentrated approach. The big money goes to the big names, and then it pours down to the best developers. Obviously, this is not investment advice, and you have to do your own diligence and know why are you taking those positions. So yeah. Annie, for example, does not do this strategy. She goes for the more volatile and more risky explorers and some developers like UX, which has a great base of assets, really. UX in Athabasca Basin. Now Tolby says that he has 11 positions in uranium and 8% of portfolio. I think that that 8% of portfolio is gonna grow because of the of the appreciation of the assets, but obviously good to have some exposure to uranium. And yeah, the presentation obviously is running late, so that's a shame. We'll have to wait, and you can join the channel, subscribe to the channel, and leave a like in the video. And I do other videos about uranium and
And
nuclear
instructions
energy. Here
will
we go.
follow at that time. Participants can also submit questions through the webcast page using the Ask a Question button. I will now hand over to Director of Investor Relations, Corey Koz, to open the presentation. Go ahead, sir.
Good afternoon and welcome to Kazatomprom's conference call to discuss the company's annual 2020 operating and financial results. My name is Corey Koz, Director of Investor Relations, and we thank you for taking the time to join us today. Our conversation will begin with a presentation by our CEO, followed by an opportunity for investors to ask questions. You join the webcast through the Kazatomprom website or through our company page on the London Stock Exchange website. Note that there will be slides displayed during the remarks. These webcast slides are also available for download in English and in Russian as PDFs called 2020 conference call slides. Note that our press release, full version of the operating and financial review, along with our audited 2020 financial statements, are now available on Kazatomprom's website.
Yes, Ian had that offtake of that 50% of Kazatomprom's uranium mine.
Sidzikova, Chief Financial Officer, and Askar Batirbayev, Chief Commercial Officer. This call is open to all stakeholders, with the question and answer portion being intended as an opportunity for members of the investment community to ask their questions. Please note that the question and answer session will be conducted in English. The simultaneous translated Russian conference line is in listen-only mode and will include a translation of the Q&A. This conference call may include forward-looking statements. These statements include all matters that are not historical facts. By their nature, forward-looking statements involve risk and uncertainty, and they are not guarantees of future performance. The company does not make any representation, warranty, or prediction that the results anticipated by such forward-looking statements will be achieved. I will now turn it over to Galamjan.
Thank you, Corey, and hello, everyone. Thank you for joining us today to discuss the current uranium market environment, along with the key areas of interest from Kazatomprom's 2020 full-year operating and financial results, which were released earlier today. We will get to some highlights from those results in a moment, but first, it's important to update you on COVID-19 and the global pandemic. I think the word unprecedented has now joined the list of overused corporate words, but it's difficult not to use it just one more time to say that 2020 was an unprecedented year. The COVID-19 pandemic caused significant concern for people and businesses all over the world, with each of us experiencing the effects of this terrible and deadly disease in some way. For many, managing through the related emotional and mental distress has been among the biggest challenges. As a company, we have put the safety, health, and well-being of our employees and communities above all else, including production and profit, and we will continue to do so. As we discussed on our half-year conference call in August, we took early and decisive measures when the first cases of COVID were discovered in Kazakhstan in March 2020. We reduced staff levels to a minimum, suspended wellfield development and other site activities, and introduced rigorous safety protocols at all our operations and offices. In terms of the lessons learned during the second half of 2020, the recent localized COVID cases at Katko, Semizbayu, and Karatau emphasized the need for continued vigilance. We adjusted the safety testing and quarantine protocols that we had in place across all our operations to ensure they remained effective. Importantly, before employees are allowed to return home for a shift change, we ensure everyone tests negative, adding a layer of protection for local communities. And while the availability and distribution of vaccines has generated hope, it's clear that the world has not yet overcome this crisis. Our risk mitigation and business continuity plans were put to the test, as was the entire nuclear fuel cycle. I believe our character is determined by how we act in a crisis, and our company and industry rose to the challenge and responded based on our core values and determination. And the industry response is starting to gain international attention. In 2019 and early 2020, we had started to see nuclear being recognized more and more as an important part of a green economy, working alongside renewables to combat climate change, improve air quality, and provide safe and reliable baseload power. When the pandemic took hold almost exactly a year ago, some started to question how nuclear might be impacted. If energy demand was down, uranium consumption could drop. If global economic uncertainty became a concern, carbon emissions, clean air, and climate change initiatives might be put on hold. I think it is safe to say that those concerns have largely been put to rest. And though 2020 was a challenge for all market participants, if anything, the health of people and our planet has become even more of a focus for companies, investors, and governments. The need for carbon-free baseload electricity has been reinforced by the need for uninterrupted energy during times of crisis, providing reliable power to homes, hospitals, and digital infrastructure. And with the recent climate event in Texas, it's obvious that operating cost stability is also a concern. There is a growing focus on ensuring investment dollars are deployed ethically and responsibly in the capital market. For example, we're hearing about large funds declaring that they will move away from fossil fuel investments and push harder on green investments. The shift of investment capital has required an ongoing review of what constitutes green, and those that are taking the time to effectively weigh the risk-reward are recognizing the benefits of nuclear power generation. This has created an opportunity for increased promotion by the industry itself, and we are already seeing that happen through the WNA, NEI, and IEA, and others. So in the context of green economies and reducing society's impact on the environment, I believe we will be able to transform 2021 and subsequent years into a period of significant opportunity, particularly for the nuclear industry. Nuclear provides about 10% of world's electricity generation, with new build programs remaining on track in key jurisdictions. The expectation of continued overall growth of about 1 to 1.5% per year, net of closures, means uranium demand is continuing to rise. But that's not to say nuclear is finding widespread acceptance. Construction in the US has led to 11 reactors closing since 2013, with 8 now set to close within 5 years. This coming year alone, 5 are expected to begin decommissioning, setting a grim record for an annual drop in clean energy output in the US. Since 2011, several other nations, including Germany, Belgium, Spain, and Taiwan, initiated plans to completely phase out their reactors. Others, like Italy, rolled back plans to introduce nuclear to their power grid. But despite those negative developments, the markets that are key to our industry growth story remain committed to their nuclear plans. China recently released their 14th five-year plan, which targets net zero carbon emissions by 2060. The plan calls for 70 gigawatts from nuclear by 2025, up from 51 gigawatts at the end of 2020. And by 2035, the country plans to have 180 gigawatts of nuclear generation in place. That represents only 5% of China's forecasted electricity generation, but it would still make them the largest global consumer of uranium by a significant margin. So today, long-term security of supply is undoubtedly a focus for the Chinese new build program. And the large inventory they have built over the past decade is an absolute necessity. After all, reactors being built today can be expected to run safely until the year 2100. India has also remained committed to an increased reliance on nuclear power, along with countries like Argentina, Belarus, Japan, Romania, Russia, and UAE, just to name a few. On balance, we believe the long-term demand picture has gained some strength over the past year, But it was quite the opposite story for supply, which was weakening prior to the pandemic and is now even more concerning. It is no surprise, based on mine suspensions and reduced operational activity, that the market found itself in a supply deficit in 2020. COVID has sped up consumption of global inventories and moved us closer to a transition. But despite everything that has happened, we have not yet seen a widespread sentiment shift. Price increased to $34 per pound in the second quarter of 2020, but it slid back to $30 per pound by year end and has continued to decline. Although we ended 2020 with a supply deficit, the market has been relatively quiet so far in 2021. There simply continues to be spot material in the hands of intermediaries and some producers whose interests are not long-term. With very little end-user demand in the market in Q1, it doesn't take much in the way of mobile, near-term supply to push the market lower. Geopolitical and trade concerns have decreased with the Section 232 U.S. Nuclear Fuel Working Group recommendation and Russian suspension agreement issues being resolved. But end users of uranium fuel remain comfortable and covered for 2021 and 2022. This gives them time to sit back and assess the new uncertainty, which is the future impact of this pandemic on the global supply picture. The continued deferral of long-term activity for several years now leads to a common investor question. Is this market setting itself up to follow some other commodities and move away from long-term contracting? A complete shift toward heavier spot market contracting seems unlikely, as all aspects of both supply and demand in our business are long-term. The unexpected conversion market bottleneck that has developed over the years, which was due to undercapacity in that part of fuel cycle, serves as a reminder that medium and long-term supply chain risks cannot be ignored. If we take the third-party view that spot price is for uranium delivered in 3 months or less, and that the spot market in general represents uranium for delivery in the next 12 months, it's hard to envision that complete shift to just-in-time uranium mining and delivery. On the supply side, uranium mines take time to bring into operation. So the market must provide producers with longer-term economic certainty in order to deploy the necessary capital and undertake the risks involved in mining. We're not going to invest time and money to restart or develop assets to meet demand 5-10 years out in time if there is high potential for the price to drop right back to $18 again. Moreover, the spot market volumes are far from big enough to supply the industry's annual need, and that spot market is thinning. Relying on that thinning spot market and assuming the supply chain at each step will be perfect for something as critical as electricity infrastructure seems like too great of a risk with too much at stake. So as the future balance of supply and demand becomes clear, it is widely believed that the next cycle of long-term contracting will drive market recovery, not a matter of if, but when. Turning to our business and 2020 results, I can say that despite the year's difficulties, Kazatomprom performed exceptionally well. To name a few highlights, our strong environmental record remained intact, and we have continued to emphasize safety and near-miss reporting. Safety statistics remained largely unchanged year over year, so we are continuing to implement international practices such as stop work cards for unsafe activities and focusing on a continued shift of the internal safety culture to improve safety performance. Robust corporate governance also remained top of the mind to balance the interest of all stakeholders. We added Mark Kasher to our board of directors, an independent director who brings strong capital markets experience and additional financial expertise to the board. In March, we sold all but one share in our enrichment center joint venture to our Russian partner, Tvel, for 90 million euros. With the one share that we retained, we maintain access to enrichment services according to the original agreement, which is expected to benefit to Kazatomprom and our customers in the future. In June, we paid to shareholders our second dividend as a public company. Applying our dividend policy calculation to the 2019 results, the payment was for over 99 billion tenge, which well exceeded our IPO commitment to pay out a minimum of $200 million equivalent in 2020. Going forward, the dividend proposed by the board of directors to shareholders will continue to be calculated based on the dividend policy. Also of note, in June, our majority shareholder, Sovereign Wealth Fund, Samruk Kazyna, undertook a secondary offering of shares, increasing Kazatomprom's free float to the full 25% intended under the privatization program. The transaction was well received and supported by the investment community and has added to the trading liquidity of Kazatomprom shares at a time when we are seeing increased ownership interest. In August, Kazatomprom was certified for compliance with international standard ISO 45001 for our occupational health and safety management system and ISO 14001 for our environmental management system. The certifications keep Kazatomprom on track to reducing and preventing occupational injuries, minimizing risk to the environment and personnel, and delivering a more effective and continuously improving health, safety, and environmental program. In November, several management changes took place, with the new executive members now fully engaged in their respective roles. Near year-end in December, we also announced progress toward the sale of 49% share of Ortalyk operation to CGNPC, our Chinese partner in the fuel fabrication plant joint venture. If the Ortalyk sale is approved, the proceeds would be put to use in several areas, including work to enhance our already strong environmental standards and some replacement capacity capital projects we need to complete in order to be ready for the potential future growth in production we see coming. We also plan to look at value creation opportunities in our beryllium and tantalum business to support future profitability of the segment. Turning to a short look at our 2020 financial results, the broad highlight is that we have once again delivered on our commitments and met or exceeded our guidance metrics. Production expectations were reduced in the first half of 2020 due to our actions to protect our people. So the original plan to produce 20% below the subsoil use agreement was further reduced to be more than 30% lower than subsoil contract levels. We stuck to that modified plan, and compared to 2019, production ended the year about 15% lower on a 100% basis, and 19% lower for the volume attributable to Kazatomprom. We remained the largest seller of natural uranium in the market in 2020, delivering on every commitment without interruption and, importantly, delivering far more than we produced. This impacted inventory, bringing the year-end level down to the bottom of our comfort zone of about 6 months of attributable production and requiring some small opportunistic purchases in the market. With the success of our sales plan and the rise in uranium spot price, the company's average realized price increased by 10%, fueling an increase in our consolidated and uranium segment revenues, which were 17% and 21% higher than 2019, respectively. In terms of costs, C1 cash and all-in sustaining costs fell to $8.67 US and $11.72 US, respectively, while CapEx spending at the operations was down 9% year over year. All three areas were below the guided ranges and lower than last year, largely due to the impact of reduced activity in Q2 and a weaker Kazakhstani tenge in 2020. Delivering on our guidance meant that we continued to create value for our stakeholders. Adjusted annual net profit increased by 40%, while adjusted EBITDA and adjusted EBITDA attributable to Kazatomprom both increased by over 30%. Moving into 2021, despite ongoing risks related to COVID-19, we remain confident that we can deliver on our guidance. Firstly, central to our value strategy, we're continuing to produce at a level 20% lower than our subsoil use agreement for 2021 and 2022. We often get asked if we could reduce production further, but plus or minus 20% is the flexibility built into our contract with the Kazakh government. And while it would be possible to negotiate further reductions, we feel that with the current mining plan, we're doing our part to build a healthy supply-demand balance. Since our initial flex down of production in 2017, we have now removed more than 22,000 tons of uranium, over 57 million pounds, from the industry's expected supply stack. As has been the case in previous years, we will make a decision for our 2023 production during the third quarter of 2021. Our pipeline of contract discussions is expected to deliver sales at a similar level to 2020, which would again outpace production by over 1,000 tons of uranium. Regarding the recent Yellowcake option to exercise their $100 million uranium purchase for 2021, it is a great development, as we do not include that possible sale in our annual sales plan. When they make the purchase, it takes some pressure off the sales team and is potentially additive to our plans. But with ongoing contracting discussions elsewhere in the portfolio, we will not change guidance until we have more clarity in the year-end picture. We expect to use production and inventory to fulfill the Yellowcake obligation, although we may also purchase some spot material, since the spot price has fallen below the locked-in sale price, creating an arbitrage opportunity and a chance to commit more pounds from spot. Revenue is expected to be up next year compared to 2020, but it is the case every year. To estimate revenue, we will apply an external third-party uranium price estimate. And to the extent actual uranium prices are higher or lower than that, revenue could also be higher or lower. The third-party price used is not our expectation for 2021, but as a company controlling more than 40% of global supply, we do not disclose our own internal estimate. C1 and all-in costs are expected to be marginally higher than 2020, as we have returned to planned production levels that are 20% below subsoil agreements for 2021. And CapEx spending is expected to be higher for the same reason, pending our ability to operate and complete projects at normal activity levels throughout the year. As of late, we have seen our share price rise to new highs in tandem with other uranium players in the equity market, although it has happened with little correlation to the uranium price. Since it is the commodity price that drives our financial results, we continue to believe that based on our anchor position in the uranium market and the increasingly positive market dynamics, the company continues to be undervalued. But despite the general bullishness and excitement, our strategy has not changed. The management team and board of directors remain committed to value over volume in its decision-making, with the marketing and sales team continue to exercise discipline in their market activities. So we have maintained our lower than planned production levels and will continue to do so. Our marketing function has developed relationships and signed contracts with new markets and with new customers. We remain committed to our core business of uranium mining and the front end of the nuclear fuel cycle value chain. The implementation of the strategy and the decisions we make will continue to be guided by a firm commitment to the highest standards of health, safety, environmental stewardship, and corporate governance. The challenges faced during the pandemic did not prevent us from delivering under our contractual commitments to our customers. And as a result, we have reinforced Kazatomprom's reputation as a reliable partner and fuel supplier to the nuclear industry. We are confident in the long-term fundamentals, and as the market transitions to a more rational price for the fuel the industry needs, Kazatomprom, as a low-cost producer with substantial long-term reserves, remains best positioned to benefit from recovery. Thanks for your interest and attention. We'll now take questions from stakeholders on the call.
Thank you, Galanjan. I will pass back to the operator now for the Q&A session prior to answering the questions written on the webcast. So go ahead, operator.
Okay, we will now begin the question and answer session. Please limit yourself to 2 questions at a time. If you have additional questions, you are welcome to rejoin the queue. As a reminder, you can also submit questions using the Ask a Question button on the webcast page. So if you wish to ask a question, please key star and then 1 on your telephone. If you decide to withdraw your question, simply key star 2. All questions will be answered in the order received and you'll be advised when to ask your question. All other lines will remain on listen only. So just to remind you, if you wish to ask a question, please key star and then 1.
So you can leave your comments about what you thought about the presentation, and we are starting the Q&A now with investors.
Okay, our first question comes from Alexander Pierce from BMO. Please go ahead. You're live in the call.
Great, thank you. Hi all. So, but just given the balance sheet is so strong right now, and you don't have any huge capex burden going forward, is there a chance that we could see dividends over and above the policy that you outlined earlier? In potentially in in a special or something similar.
Hi, Alex. Thank you. Hope you had a chance to get a coffee before we started our call a bit late than the planned. Thank you for the question. For the time being, Alex, we're going to strictly follow the dividend policy. Board will make its recommendation soon for the AGM. We'll go from there. You're absolutely right that we have a very strong balance sheet and in a position to significantly increase dividends if board recommends and shareholders approve.
Okay, great. Thank you.
Okay, our next question is from Ildar Davlechin from Ildar Davlechin. Please go ahead. You're live in the call.
Good afternoon. Thank you. This is Ildar Davlechin from Wood & Company. I want to ask a question on the contracts. Like last year, because of COVID, I think the opportunity to negotiate was reduced. Now, where do you see yourself now in negotiations with key customers? I think you mentioned that you signed contracts with new customers. Would be great to know what sort of pricing formula you have, like how much is linked to spot? Is there any change relative to recent contracts in the new contracts? And generally, do you see improving higher demand, or is it still similar to last year? Thank you.
Yeah, thank you, Ildar. Great question. As we continue to say, Ildar, we are very positive on the mid to long-term perspective. So at the moment, we're not prepared to fix prices at this level. So we continue to prefer pretty much spot at the time of delivery. And yes, our marketing team is continuing to work with the new customers, especially in North America. Yes, we haven't been able to travel, but we hope we can renew those activities face-to-face soon. But we've been participating in all of the RFPs and online contacts. So pretty much excited to continue, as we've been doing so far.
All right, thank you.
Okay, our next question is from Boris Sinitsyn from VTB Capital. Please go ahead. You're live in the call.
Hi, gentlemen. Thanks for the presentation and congratulations with the supportive results. 2 questions from me, please. Firstly, on your CapEx guidance, If I remember correctly, during the first half 2020 financial results, you were expecting to kind of to trim 2021 capital guidance a bit. So the figure announced slightly above my expectations. The question is, what is the driver and how it might affect your production in 2021, 2022, and 2023, if anything? That's the first one. Thank you.
Thank you, Boris. In terms of capex, it is in line with our kind of normal going rate. It's just more than 2020 because 2020 for 4 months we haven't really done drilling and new well field development and some other works, and some of the capex were delayed into 2021. Going forward, this is kind of a normal numbers. If you remember, if you look at our all-inclusive and cash cost, the difference is literally what it is per pound to get pounds ready for mining. So that gives you a really good indicator if you want to forecast, how much we're going to be spending on sustaining capital. You can pretty much use our guidance for production, and difference between all including sustainable capital and cash cost, that the difference per pound gives you a rough number, pretty much very accurate.
Okay, thanks. And follow up on this, do you think that some portion of this capex might relate to your optionality in terms of production growth in case global uranium market improves in the next few years?
Not really. We already in the work preparing for 2022 and 2023 capex plans that will have some of the capex giving us, much better readiness for increased production, probably 2024 or beyond. But 2021 capex, no, this is purely sustaining current levels of production.
Got it. Thank you. And the second question from me is on working capital. It looks like you ended 2020 with a bit higher inventories, also probably receivables. So what's your outlook for structural change in turnover in 2021 with regards to the whole working capital?
Boris, it's pretty much going to be at the same levels. Camila, do you want to add details?
Yeah, Boris, thank you. So as for the inventory levels, we stick to our guidance of 6 to 7 months of attributable production in inventories. So, during the year, we've dived a little bit into inventory levels, and restored that a bit by the end of the year. As for the receivables, it's just really normal course of the business. Some of the deliveries that were done during the last quarter, so they would come in this year. We don't really expect any structural changes in our working capital going forward.
Okay, thank you so much.
Okay, there are no further questions on this line. I will now pass on the question and answer session to my colleague.
Thank you, operator. If you would like to ask a question on the Kazakh line, please press *9 on your keypad. As a reminder, please limit yourself to 2 questions to ensure all investors with questions can participate. If you have additional questions, you are welcome to rejoin the queue. As a reminder, if you would like to ask a question, please press *9 on your keypad.
Okay, we have a question on the audio lines. Our next question again is from Boris Sinitsyn from VTB Capital. Please go ahead, Boris. You're live in the call.
Again, thanks. Actually, I had a third question, so since nobody is asking, I would be happy to ask. Thanks for the opportunity. I have a question on the market. China announced its next 5-year plans with regards to economic development, which included the new plans for nuclear capacities. What's your view on this? How does it affect your market outlook for the next 5 years?
Yeah, thank you, Boris. This last 14th, 5-year plan and few announcements around that just confirms Chinese commitment to nuclear. They really want to go to 180 gigawatts capacity, going from 51 end of last year to 70 before end of this plan, 5-year plan, which really shows the commitment. And frankly, from some of the comments coming from China around discussions to build strategic, stockpiles of uranium, is something I think some of the market participants are missing. We actually really see a serious interest from sovereigns to build strategic stockpiles. And I do believe that they are looking at mid to long-term supply-demand picture. And I'm not going to be surprised that they're actually going to act first before some of the utilities may come to market and start covering their long-term needs.
Thank you. Very interesting.
Okay, we have no further questions on this line. I will now pass to the management team for written questions.
Thank you, operator. Okay, on the submitted questions, we have two. The first is from Jason at CFN Capital. Question for Galimjan. With the recent news of the Yellow Cake and Denison mines both announcing their purchasing uranium on the spot market, what is Kazatomprom's thoughts on being able to also buy from the spot market in order to meet the requirements and fulfill our committed contracts?
Thank you. Yes, I mean, we all along communicated that we will opportunistically use, buying in the market when and if there is a commercial sense. With Yellow Cake, yes, a sizable part of that will be, bought in the market. As you've seen the price, the price that we fixed with Yellow Cake for that $100 million contract is above what, today's price. So the contract price with Yellow Cake was $28.95, and today, we're above 27 in the market. So that also makes sense for us to, get into market to cover sizable part of that delivery. Bearing in mind, our inventory levels are at the lower end of our comfort zone. Will continue to be so. So it makes perfect sense for us to continue to look at the market and for opportunities to buy to cover those deliveries.
Okay, thank you. Our second question on the typed in questions is from Daniel Sedikov at dalainform.kz. Do you expect the taxation burden will increase for uranium companies anytime soon in Kazakhstan?
Yes, thank you. No, we don't expect taxation to change anytime soon in Kazakhstan, no.
Okay, that's all the only questions that we had from the submitted questions. I'll just remind anybody listening that if any questions do come to mind, by all means, please reach out to Kazatomprom, our IR team, our PR team. We're more than happy to engage in a conversation at any time. So I'll just briefly hand over back to Galimjan for a quick closing.
Thank you, Corey. Thank you, everybody, for taking the time to join us for the call. As always, if there is any questions, just please reach out. In the meantime, please be safe and take good care of yourself. Thank you.
Thank you, ladies and gentlemen. That concludes your conference call for today. You may now disconnect. Thank you for joining and have a very good day.
Okay, so that finishes the Kazatomprom's presentation for today. Hi Angel, how are you doing? As Angel says, a sizable part of the 3.5 million deal with Yellowcake will be bought in the market. That's a really interesting thing. They are trying to get those pounds in the market, mainly because they are not comfortable with their inventories right now. As he said, they are in the low end of their inventories and they don't like to have so little inventories. They are running at probably 40% of annual production of inventories, which is pretty low for them. So that was really interesting part, one of the insights that we could get from them. Another good insight, I think it was when they were talking about the Chinese going to step in the market before utilities to procure that uranium for the medium and long term. As we know, China plays the long-term game. As they are not a democratic country in that sense, they can make plans for not for 4 years, but for 50 years. So that was really interesting. He said explicitly that China was going to move before utilities to procure that uranium for the long term. So I thought that was a really interesting thing. But he didn't talk only about China. He was talking about sovereign uranium procurement. I mean, countries are looking at uranium to have that strategic uranium inventories. So those remarks were really interesting. As I said, that part of the Yellowcake thing that they are going to try and cover in the market, I don't know if they are going to find those pounds in the market, and that Chinese comments that were really extremely bullish, and that China, a lot of people say that China have a lot of inventories of uranium, which is true, but they are not mobile inventories. They are keeping those inventories, they are playing the long-term game as always do. And those were the two highlights for me. The low inventories, as Thomas says, really bullish. They are not going to overproduce this year. I mean, to high-end the inventories, I mean, they are not going to do that. They are going to keep with their production lower than 20% of their maximum capacity, which is good. They continue to be really good in that front. I mean, some people have doubts, about Kazatomprom, and probably that they are producing more and that stuff, but the reality is they are really taking this medium-term and long-term approach also. So that I thought it was really interesting. And the only thing that they didn't talk about much was the prices of long-term contracts, or didn't signal that they were talking with utilities. I think he talked about talking with utilities in North America and regaining traction in that front, but nothing specific really. Of course, he talked that they are not signing long-term contracts, obviously, in these prices that we are today, and that they are referencing their long-term deliveries to the spot price. So probably if they have a delivery in 3 years, they are referencing that delivery to the spot price at time of delivery. This is really important also to take into account, because they are expecting that in a couple of years the spot price should be really up from these levels. So those were the highlights for me. Really thank you for everyone that joined the conversation and the presentation. I thought, as always, it was really interesting with the when the big players take their time to talk with investors and share their opinions about where the market is going. So if you want, you can leave a like to this video. You can subscribe to my channel, where I speak more about uranium and nuclear energy. And next time, where a big company presents their results, like Ameco, others like Kazatomprom, obviously the two big ones, when they present results, we will be doing this type of live events, so the uranium investor community can gather and we can have a chat, which it was really good to get to know a lot of people today in the chat, and really grateful for this amazing uranium community. So also, if other companies are doing this type of presentations, I will cover them live if you are interested, and you are, as I said, welcome to join the channel and subscribe for next presentations like this. So thank you very much for being here with